Good afternoon, this is Dale Ellentenny with the Gust & Cho team, here to talk to you self-employed borrowers looking to buy owner-occupied properties, leveraging your business to buy those properties. We've talked about the bank statement program, but I want to expand on that a little bit on what you could possibly do as a self-employed borrower. So as a general rule of thumb, if you're a self-employed borrower and you're using business bank statements, we're typically going to take 50% or half of the deposits as an expense factor of the business. So if you're depositing $50,000 a month, we're generally going to use $25,000 a month. Sometimes the expense factor could be a little bit higher if the underwriter deems the expenses of the business to be higher. Sometimes the expenses could be a little bit lower if we get a CPA letter, the individual doing your taxes as a business, certifying or attesting to a fact that your taxes are maybe lower, or your expenses of the business, I should say, are less than 50% of the overall revenues. So just as a general rule of thumb, that's a great tool to use in leveraging the cash flow from your business to purchase or refinance a property. Many of these non-QM products are letting you do 1 year tax returns as opposed to 2. So if you're a self-employed borrower and you had a really strong year in 2019 versus 2018, you can use the 2019 tax returns only. Another thing that was gone for a while that is now back is the P&L program, where we're accepting a profit and loss statement from an accountant. It's got to be from a CPA, verifying the total expenses and revenues of your business and translate it into a year-to-date net profit. Very nice program if you're a self-employed borrower. Maybe your cash flow in your bank accounts aren't consistent, but you do nonetheless have a certain amount of received revenues at a certain point in the year. Maybe the P&L program is better for you. Nonetheless, just expect in most cases, if you're self-employed, at a minimum you're going to need 3 months reserves, maybe 6, meaning if your payment's $1,000 a month, you're going to need $3,000 to $6,000 in savings. Down payments typically have to be 5% of your own funds, and the rest can be gift. Thanks and have a great day. If you have any questions, if you're one of these people, feel free to call me at 630-479-2719. Thanks.